Zuber and Company, fire forensic experts and forensic engineers. Seeking answers from ashes. Seeking answers.
Imagine this, your entire business, everything you've worked for, literally goes up in smoke overnight. So you file an insurance claim, expecting that lifeline. But instead of a check, you get an accusation. Arson? This is the incredible story of a massive fire, a claim worth nearly 20 crore rupees, and the epic legal battle that followed.
So here's how we're going to break it all down. First, we'll see how the business went up in smoke. Then we'll get to the shocking accusation that changed everything. We'll dive into the battle of experts with their conflicting reports, see the court's final verdict, and figure out how they calculated that massive payout. And finally, we'll talk about why this case really matters for anyone who has an insurance policy.
All right, let's set the scene. It's 2 a.m., October 15, 2014, at the Palanadu Cold Storage facility in Andhra Pradesh. A fire breaks out, and the result? Well, it's nothing short of catastrophic.
I mean, this quote from the actual case file says it all. This wasn't just some minor damage. We're talking total devastation. Everything was gone. The stocks, which belonged to countless local farmers, were ashes. The building itself, it just collapsed into rubble.
And that brings us to the money. The stakes here were enormous. The owner filed a claim for almost 19.5 crore rupees. I mean, that's a staggering amount of money, right? It represented not just his building and machinery, but more importantly, the value of all the produce farmers had entrusted to him.
Now, to really get what happens next, you have to look at this timeline. So the owner had a policy with national insurance, then he added a second one with Oriental. But here's the key part. Just 1 month before the fire, he increased his national insurance policy to cover the business's full value. Now, to the insurance companies, well, that timing looked just a little bit suspicious.
So the owner is expecting a settlement. He needs to rebuild his business, he needs to pay back the farmers, but what he got instead was a flat-out denial of his claim and an accusation that was about to turn his entire world upside down.
The insurance companies formally repudiated the claim. That's the official term. And their reason? They had commissioned a private lab, and that lab's report concluded the fire wasn't an accident. They claimed it was arson, and that someone had deliberately used kerosene to start it.
For anyone who doesn't know, repudiation is basically the nuclear option in the insurance world. It's not just a delay or a request for more paperwork. It's the insurance company officially declaring that they think you've committed fraud, and because of that, they owe you absolutely nothing. And that's what set the stage for this huge legal fight.
So, with this accusation of arson on the table, the whole case now boiled down to a central mystery. And this mystery would be fought out through a battle of competing forensic experts.
So, what do you think really happened here? Was this a desperate business owner trying to commit fraud, like the insurers said? Or was this just a tragic accident, and the owner was now being unfairly targeted by companies trying to avoid a massive payout? The court had to figure it out.
This slide right here is the heart of the entire conflict. On one side, you have the insurance companies holding up a single report from their private lab that screams arson. But on the other side, you've got the business owner, and he's backed up by findings from multiple official government agencies, all of them pointing to a completely different cause, an accidental electrical fire.
Let's just break down the official evidence for a second, because the weight of it is pretty wild. First, the deputy electrical inspector finds clear signs of a short circuit. Then the police do their investigation and officially conclude no foul play. After that, the state's own forensic lab tests the debris and finds zero trace of accelerants like kerosene. And just to be absolutely sure, the owner hires his own lab, and guess what? They come to the exact same conclusion. You've basically got 4 official reports versus 1 private one. So, you've got this mountain of conflicting evidence. How does the court, in this case, the National Consumer Disputes Redressal Commission, even begin to make a decision? Well, let's see what they did.
The commission was really decisive, and this quote from their ruling tells you everything you need to know. They looked at the pile of reports from the deputy electrical inspector, the state forensic labs, and the owner's lab, and said, look, it's clear. The evidence shows this fire was caused by an electric short circuit.
So, the verdict was in. The cold storage owner won. The court ruled that the insurance companies were liable and that they had wrongfully denied the claim. That heavy accusation of fraud? Dismissed. The claim was officially declared valid.
But winning the case is only half the battle. The next big question was all about the money. Exactly how much did the insurers have to pay? Now was time for the commission to crunch the numbers.
Now, the court didn't just blindly award the full amount that was claimed. Instead, they relied on a really detailed assessment from a surveyor who went through everything piece by piece to calculate the actual value of what was lost. As you can see, the final amounts were a bit lower than the initial claim, but they were based on hard data, balance sheets, and stock records.
And because there were two different insurance policies covering the stock, the final bill had to be split between them. The court used a pretty simple ratio based on how much coverage each company provided. National Insurance had the bigger policy, so they were on the hook for about 64% of the stock loss. Oriental Insurance had to cover the other 36%.
So what was the final tally? When you add up the assessed loss for the building and the stock, the grand total came out to just over 13 crore rupees. And on top of that, the court ordered the insurers to pay 9% annual interest on that amount, starting from the day they first denied the claim.
So, okay, that's one dramatic story. But what are the bigger lessons here? Why should this legal battle over one cold storage facility in India matter to the rest of us?
Well, this case actually reinforces some really important principles. First, and this is a big one, official reports from government agencies carry a ton of weight in court, often way more than private investigations. Second, it reminds us that insurance is there to cover your loss. You can't just be denied because it's a commercial policy. Third, having multiple insurance policies is perfectly legal. It's just a way to manage risk. And finally, if an insurer is going to accuse you of something as serious as fraud, the burden of proof is on them. They need a lot more than just one contradictory report.
Ultimately, this whole case was a clash of experts, a battle of reports, where someone's entire life's work was hanging in the balance. It leaves you with a really critical question, doesn't it? When the experts disagree and your livelihood is on the line, how much proof is actually enough to find justice?